What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Christmas week special. This is the week which is going to have some Santa rally, if you're going to see some. So Santa Claus is going to hopefully make an appearance this week. So we are towards the last full week of 2025. And next week, I think it's just going to be a few days. And then 2025 is officially going to be in the books. It's going to be over, and super excited to see how the markets perform this week here. So hope you all are doing great. Welcome on board for this market open live stream. And I did a Tesla update earlier, so we're going to cover a lot in this update as well, in this video, in this pre-market live stream, as everything is once again moving higher. Pre-market, especially crypto. We're seeing BITX up over 4%. We got iron up over 6%. Nvidia, Tesla pushing up over 1% each. Then we've got TQQQ. We've got Meta Platforms pushing up 0.5%. Today is the day for me to sell some Meta covered calls again. So today is going to be that day where we're going to be selling some Meta calls again. And we'll see what happens with this covered call on this Friday. Palantir, Amazon pushing higher. We got Oscar, SoFi, Mercado Libre. BMNR is up over 4.5%. MSTX is up. Broadcom pushing higher. So there's a lot of momentum coming in as Santa looks to make an appearance for this Santa Claus rally. So hope you all are doing great. Good morning, good morning. How are you celebrating Christmas in 2025? What's going on? Are you guys traveling? Is the family coming over? Very, very excited to learn everybody's plans. And hello from Germany. Finally, I see iron going better. I have 50 shares. That's incredible. Good morning, everybody. Very, very Merry Christmas to all of you. Happy holidays to everyone. Good morning to you for your work. I'm interested in joining your group. If you can have a phone call, absolutely, Dory. Email me at admin@moneyvest.com. So that's my email. And what I will do is I will share my calendar link with you. So anybody who emails me, I will share my calendar link. We can schedule a very quick call and then we can get started, right? So I really want everyone to start 2026 having the right tools, having the right mindset, growth mindset, focusing on building their assets, killing off all liabilities, crushing all debt, and focusing on building assets and income. That is my hope and my goal for everyone that joins our communities. We want to build assets, minimize liabilities, and live a truly free life, not bogged down with debt or bills. I really want everyone to do well, and that's exactly what we're here to do, is provide you the tools, the education, the resources, the community, everything you need to succeed in your financial journey, right? So whether it's options trading, swing trading, long-term investing, all of that, we're here to help you with. So email me, admin@moneyvest.com, and I'm more than happy to set up a call. And Akash, good morning. Iron covered calls today. Yes, the plan would be to sell some iron covered calls as well. I do have, like I said in my previous fan favorite video, a lot of stocks currently uncapped, meaning I do have iron, HIMS, Oscar, BITX, and Meta. Those are the 5 stocks that I have right now that do not have any covered calls against them. So the plan would be to sell some covered calls. Meta, for sure, I'm selling one today. We'll see what the premiums look like for Meta for this Friday, December 26th. I'm going to be looking at 665. Wow, that's incredible. Over $520. So I'm super excited for that. And most likely we'll be looking at 665 or 670 calls. 4 days out, we're looking at pretty solid premium. So that is definitely going to be one for me today. And then we'll be looking at Tesla covered calls as well, as mentioned previously. I'm waiting for another week. So most likely next week, I will be looking at 1 year out Tesla covered calls for 900 or higher. So if you go out to 361 days, December 18th is the expiration. We can go all the way up to $990 now. So $990, $26 per contract. That's $2,600. And I wouldn't mind collecting $5,000 to $7,000 just by selling one, option on Tesla, 1 year out, one and done. And that's going to be the plan. So Tesla, most likely next week. Meta, most definitely today. And then Iron and BITX are going to be the two other ones, because I do have 200 shares of Iron and 600 shares of BITX in my options portfolio. And so Iron, given how much it's pushing higher today, I'll be looking at maybe a couple weeks out, January 2nd, January 9th, at $50 or higher. So those covered calls are also going to be on the radar here for today. So that's the plan. Hope you all are doing great. Let me know also, what is it that you guys are trading? Was it me, or was it a crazy 5-minute trading Friday, major volatility? It was also a quadruple witching Friday. So it was a third Friday of the month of December. So yes, we did indeed witness pretty substantial volatility here to close out the week, right? And the best part was, of course, was Meta, right? Meta was the highlight of my week, because it ended up out of the money in the last 5 minutes. So that right there was the 3-minute drop, literally right at the market close, right? Few minutes before market close. And so the buyer must have been punching air because of how frustrating it must have been, given this was the sell-off going from in the money back out of the money for those covered calls. So that right there, I would not put it all skill, but obviously a little bit of luck as well. But only the people who are working hard are the ones who get lucky. Always remember that, right? So luck doesn't just fall on your lap. There's a lot of books and studies done by how luck works, how you actually do get lucky. So it's really important to obviously be disciplined with proper risk management, and you are more likely to get lucky. So everything you are saying are very helpful. Thank you. I have a question about Nike and Coca-Cola. Are they now this price? Maybe. So for Nike and Coca-Cola, I would view them as value stocks more so than anything else. Nike has been selling off aggressively, down over 10.5% on Friday, back down to that area of support. It's going through its own issues right now. So is Nike a long-term stock? For me personally, I feel like there's better opportunities. But if you're someone who is convinced that Nike is going to turn things around, then be my guest. It's got a pretty decent dividend yield, and it's trading down to a support. Technicals do indeed look very weak for Nike. Coca-Cola, technicals are strong. I mean, it's continued to push higher. But again, it's going to be more of a value name. It's going to be a value stock as opposed to anything else. Year to date, it's up over 12%. And it's got a pretty decent dividend yield of almost 3%. So if you want more safety in your portfolio, you want a good dividend stock, which also has the potential to keep growing, then yes, Coca-Cola is a strong idea. Warren Buffett, Berkshire Hathaway, have made a killing on Coca-Cola. It's in fact one of their best paying dividend stocks. But there is, again, like I said, better opportunities for growth. If you're looking for more defensive, more value, yes, Coca-Cola fits that profile very well. So it is, again, like I said, a fantastic business to own. 1 year expiration. Yes, Stefan, that's going to be the plan. Sold a $55 call on Iron at $3.58 on Friday. Wow, that's incredible. Iron is pushing higher pre-market, so those calls are most likely going to open lower. But 55 is still really far away from where Iron is. I mean, it's still 25% away from being in the money. So that's still pretty good. Risk reward ratio, 28%, 29%. And I will most likely be selling very similar calls today. And the premiums will be a little bit better than, of course, Friday. Waiting for January to sell year-long Tesla covered calls. You know what? I could see myself waiting until January as well. I really want to see how Tesla trades over the next couple weeks here. I did a video earlier on Tesla. I think 2026 could be a big year for Tesla. It was a modest year this year for Tesla. 2025 it was up like 25% or so. So not a terrible year, but not a spectacular year either. I think 2026 with more testing, more data, as well as higher margins and the massive market in autonomous vehicles is one of the big reasons I am more optimistic for Tesla going into 2026. This year, we kind of knew the deliveries were going to stall. In fact, deliveries are most likely going to come in lower than what we experienced in 2024, 1.8 million. So obviously, they're shy of their 2 million target. This year, we knew that it was going to come in softer. But next year, I do believe that the big revenue jump, and the market that we're seeing is going to be substantial for autonomous vehicles and robotaxis. So, okay, let's come over here. Some other comments. Caddy, I'm listening to you from the headquarters of one of the Magnificent Sevens. That's incredible. If I were to guess which company headquarters you're listening in from, can you give me a hint? Are they based out of Silicon Valley or Washington, or where are they headquartered at? Or Texas? Can you give me a hint? Where are they based out of? And of course, that's going to give it away. But anything other than Silicon Valley obviously is going to give it away. But I'm going to guess maybe, I want to say Amazon. Are you watching from Amazon headquarters? But no, that's incredible that you're actually listening to the live stream from one of the headquarters of Magnificent Seven companies that we cover every single day on the channel. We spend substantial time on these companies, of course, because of the growth of these businesses. Good morning, Karthik. Is Netflix forming a bear flag on the daily, or is it forming a bottom? So let's take a look at Netflix. I know it's been selling off aggressively, and I would argue that yes, it is indeed forming some kind of a bear flag. Right now, technically, it's been one of the weakest stocks right now in FANG stocks. I don't know if anybody even uses FANG anymore. I think it's more like Max 7 is what we are more accustomed to now. But Netflix, being one of the technology companies, one of the bigger companies, $400 billion market cap, is indeed making some kind of a bear flag. Very strong support at $92 to $93. In case we get a breakdown below this, next target all the way down to $82 to $83 per share for Netflix. So that's going to be that next target in case we get a breakdown below $92. So that's going to be that level. Okay, let's come down here. You will block 100 shares of Meta for 1 year, or for how much gain? So not the Meta for not 1 year. Meta will be for just 1 week. So I'm only trading and wheeling Meta stock. So that was the main purpose of me acquiring 100 shares of Meta in the first place, is that I just wanted to wheel Meta stocks. I just want to run the wheel strategy. So will be for this Friday expiration. Happy holidays, everyone. Again, thank you so much for joining. Wishing you all a very, very happy and prosperous holiday season to you and your family. And I hope 2026 brings a lot of great fortune, a lot of great health, a lot of great memories for everyone. So let's see, with a call away at 55, it's just over 260% annualized gain on that iron trade. Cannot complain. That's incredible. Absolutely crushing it. Caddy, I know you're far from USA. What broker you use to trade outside the USA? Because I'm a US citizen thinking to move to Philippines. So do you want to trade outside the US, meaning you want to trade other markets, like other exchanges, other stocks, or you want a broker that you can use when you decide to move to Philippines, you can use from Philippines? What is the exact question, Roland? I can help you a little bit better if you're looking to trade US stocks from outside the US or other markets altogether. Because if it's the former, if you want to trade US stocks while being outside, I'm pretty sure you can continue to use your US brokers like Charles Schwab, Interactive Brokers, Fidelity, E-Trade. All of them will continue to work even if you do relocate to elsewhere. As long as you're a US citizen, resident, you will continue to be able to trade US stocks with those same brokers. So that should not be an issue. Definitely call them up, check up with them that you're planning to move to Philippines, and what are the all the paperwork. You might have to just update your address on file, and that's it. That's all you have to do, as far as I know. But all the brokers would work, as far as I'm aware. But your Meta trade last week was the best. The meeting of luck and skill. I know, right? It was crazy. I did not expect it. I was fully prepared to let those shares go up until the last few minutes. In fact, I was sleeping, so I didn't even know what was going on. But when I did go to bed, I was like, okay, it's in the money. I'm going to be waking up to my shares getting called away at a pretty nice profit. But then, woke up, and to my surprise, I was like, no way. I got my good sleep. I got to keep the entire premium, and I got to keep my shares. Could not have been a better trade. So it was a good one. You don't see that very often. A lot of the trades that I've taken in my career, you don't see the last few minutes being the decisive moment, right? A lot of the times, most of the trades, I close them very, very early, right? Few days early. weeks early. We do that all the time on Discord, right? We're taking 90% profit, 80% profit. We're closing them out early, but never in my options trading career I've seen the trade work out in the last few minutes for it to go from like negative 50 to positive 98%. Insane volatility. Yes, on the MetaTrade proof, why option sellers always win versus buyers. 100%. I could not have said it better, because this right there is the pure definition why we like to sell options. We always want to be on the other side of that trade for when we're selling options, right? Because option selling has a very high probability of success. Most options expire worthless, out of the money. Over 70 to 80% of the options expire worthless and out of the money. So if you are playing a roulette and I tell you you've got a 70% chance to lose, are you going to take that bet? Are you going to take that bet when you only have 30% chance you're going to win? Of course not. You're going to be on the other side of the trade. You're like, okay, how can I get to the 70%? How can I actually make sure that I win 70 to 80% of the times and not lose 70 to 80% of the times? That's exactly what options buying versus selling is. Like, if you're selling, collecting premium, you're collecting the profit, and you're keeping your shares, and you're keeping your collateral, and you're just repeating the process. And along the way, you're going to still be able to capture the upside. If the stocks appreciate and they go up, great. You can still collect that appreciation. Okay. Wow, Tesla 400 put looks yummy for April. Thoughts, anyone? So as long as you're comfortable owning shares of Tesla at $400, you know, that's great. So $400, in my opinion, would still obviously be a little bit of an expensive stock here. 380, 390 is something to dollar cost average, maybe a little bit. Certainly not 100 shares, depending on how big your portfolio is and how big that position might be. But anything under 400 down to $300 is where I would be a lot more comfortable. Be like, okay, I can definitely be a lot more aggressive at those price points. I'm attending this live from one of the Magnificent Seven as well. Amazing. That's great. A lot of you guys working for Mag 7 companies. I'm planning to move from the US to India forever. Can I still trade US stocks on Webull if I'm not not in the US anymore? Okay, so Webull, yes, I have traded with Webull in the past, but there's still, I think you can open Charles Schwab as well. Charles Schwab International is the actual company that is subsidiary of Charles Schwab that you can open and trade with. However, if you do become a resident of India and you are a citizen of India, then you can trade options for US stocks. So that is restricted. You can only trade futures and options within India, not in the US. You can only trade, in other words, you can swing trade, day trade, and then of course invest long term. But options trading for resident Indians is restricted. So that's something to keep in mind. Very, very important distinction there. Okay. Can you send me over here your correct email? Yes, it's admin@moneyvest.com. I did mention it up there as well, but it's simply admin@moneyvest. That's all it is. So you can just email and we can set up a call, a good Zoom call, and go over options trading, go over swing trading, long-term investing, all of that together. Okay, did you go over your new meta option? Checked in late today. So yes, I'm looking at 665, 670 for this Friday. So that's what I'm going to be looking at. What weighting do you give between the fundamentals and technical analysis? So great question. Depends on whether I'm investing or trading, right? So if I'm investing, a lot of weight is gone towards fundamental analysis, right? Fundamentals is the actual, numbers for the business, right? The company financial statements comes in, qualitative and quantitative analysis. How good is the company? How good is the management? What's the long-term growth potential, the market? So if you're investing, that's where you're going to be looking at fundamental analysis. If you're trading, then your main discipline is technical analysis, right? So you're looking at charts and patterns and volumes and trying to understand support resistance levels. But I always do prefer a holistic approach, right? So for me, it's never a 50-50. If I'm investing, it might be 80% fundamentals, 20% technicals. If I'm trading, it might be 80% technicals and 20% fundamentals. I still want to trade good quality companies and I still want to invest good structural businesses, meaning that patterns are good. Not just the fundamentals look good, but the technicals also look good. I always want to look at it from a holistic perspective, even though I'm weighing a little bit more or leaning a little bit more on one discipline over other, depending on whether I'm investing or trading. But I've always mentioned that, if your goal is to participate in the market and invest and trade, always look for quality. Quality will always win long term. That's been one of our core philosophies from the beginning. We've never, delved deeper into penny stocks or SPACs or altcoins or any of that fluff. I've never talked about it on the channel. I don't even look at companies that are less than $1 billion market cap, because quality is what we look for. It's always been focused on high quality companies, right? Companies with good balance sheets, good cash flows, good revenue, good valuations. All of those things really matter to us. So we're not chasing the next best thing, but rather we're chasing quality. That's what we want. We want to attract quality and nail down the price. Schwab is the best for international travelers. No fees, no minimums, no ATM fees either. Yep. So I've been using Schwab for some time now, and I can definitely vouch for them. They are very, very good. Okay, check Oracle, please, and sold my Nvidia position at 172. Regretting it. What is a good entry point to get back into Nvidia? Should I wait till after the Santa rally? So let's take a look at Oracle first, and then we will come back to Nvidia question. So Oracle getting a nice little bounce back higher from 180s. So that is a very, very strong area of support to watch for Oracle. Resistance all the way up to as much as 224, 225. It is down over 45% from its all-time highs. The only big concern for Oracle among many investors is going to be the level of debt. They are definitely taking on a lot of debt to build out all these data centers and do these deals. But overall, Oracle has been a market leader for a really long time. And fundamentally speaking, I think the valuation has come down significantly from where it was back in September. So now it's trading at 33 times earnings, a little bit over 8 times sales. So obviously it's not as bad as it was back in September when it was, 100% more than where it is right now. And earnings expectations are to grow going into 2026, 2027, and then explode in 2028 when the entire AI landscape accelerates. So earnings-wise, or revenue-wise, $66 billion to over $174 billion. So Oracle, it's in my shopping list. I do like this company, and technicals are also pretty strong, suggesting for some nice recovery back up to 224 as the next resistance and a support level that's going to stay put at 180 to 182. Nvidia, 172 is where you sold. That's still pretty good, decent profit, I hope, from where you bought it. This is the lower high and lower low pattern. It is already gapping up here, 1.8%, so that's good to see. This right here will turn into a support now. And in case we see some kind of pullback, I think you might still have an entry around the 170s again. If not, then I would start small and then build a position from there. We do still, of course, have lower levels for Nvidia in terms of buy targets, light buys, heavy buys. So even at 184, 185, I think Nvidia's forward price earnings multiple is not terrible. Right now trailing is 43. But if you take a look at earnings expectations for next year, 767. So if you do the math, we're looking at, price of 184 divided by 767, we're looking at 24 times earnings. So on a forward basis, 2026 basis, 24 times earnings for Nvidia, which is not bad. So you can start small and then DCA into that position as time goes on. So Morning, would you consider Iron a quality company? I would, yes. So among all the different hot watch list stocks here, as you can see right there, Iron is the one that I own, is for a reason, right? Because Iron actually does have good revenue. It's now becoming profitable. It's got a very defensible moat. However, the trajectory for Iron is a bit more uncertain, right? Because Iron is one of those companies that is very good at pivoting in the next best opportunity. And that's what they did. From a mining company to now a data service, data center provider, AI compute provider, doing it at a cost which is significantly less than its competitors because the renewable energy advantage is substantial. And that's why Iron, in my opinion, has a runway of at least 2 years. But then once we get to that equilibrium, that's what we have to analyze. Is there going to be an oversupply of data centers and AI compute? If yes, then Iron will have to lower prices. Everyone will, right? So it'll be like a race to the bottom, because then Everything will be commoditized. So it does have a runway. It is a quality company, but what we have to keep in mind, of course, is the uncertainty related to the industry that it belongs to, because Iron is, a standalone provider for AI compute and data centers, what they're building. When you look at companies like Google, Amazon, Microsoft, AWS, Azure, Google Cloud, all of this is a part of their bigger business. It's not their only business. With Iron, they're banking heavily on this being their main thing, and as they've pivoted. So if that starts to come to an equilibrium, if that starts to reach some kind of demand supply balance, then the price reduction with lower margins, that's where the risk really is. For a lot of these other companies, economies of scale, plus their other businesses, so they're not going to fall as hard as what Iron could fall if there is some kind of equilibrium there. So what do you think about Nvidia overall? When Nvidia hits all-time high again, do you think it could go higher? Do you think $212 is justified? Do you think there is more growth? What about AI risks? So from what I know, and what I can foresee is that Nvidia definitely has more upside. This for me is like a known fact within myself. Like, that's my opinion. And reason being is because there's never been a time when a lot of everything, work, just normal, so work and conversations and productivity and manufacturing and all the different industries that are out there are getting transformed with artificial intelligence to a point where everything's going to have technology, right? So all the semiconductors, I should put it this way, not Nvidia, but semiconductors and chips as a whole is a sector that has the most potential. If you were to ask me if there's one sector that is going to win the next decade, right? It's going to be the sector that's going to be, if I could only invest in one place for the next 10 years, I would be betting on semis, chips. If I could only buy SMH, that's it. I would only buy SMH. And I've been investing in SMH for a long time, right? So this is an ETF that I've just been plowing money into because this is my highest conviction bet of all of them. Forget about everything else. If I could just buy one thing, it would be SMH. That's it for the next decade. And since Nvidia is the leader, then to answer your question, by default, yes, Nvidia has more upside. Is there going to be competition? Sure. But it is an industry that can coexist with so many players. I mean, the AI ecosystem and especially the semiconductor ecosystem is so big. If you look at, semiconductor ecosystem, just type this on Google and you will go to images and this is what it looks like, right? So you've got foundries, you've got designers, you've got equipment manufacturers, you've got all kinds of companies, right, that are doing such meaningful work that are unique and important in their own way. So in the shopping list, you'll notice that we actually have a lot of semiconductor companies in there. We've got ASML, we've got Cadence, we've got Nvidia, we've got Advanced Micro Devices. I love Qualcomm, I love Micron. I really like Cloud Corporation. I like Applied Materials. We've done research on Lam Research. Like, there's so many companies that we have covered. TSMC, right? The cornerstone, literally the foundation of the entire AI ecosystem and semiconductors in general. So, and Broadcom, right? We literally talked about Broadcom when it was at 500 billion. I still have that video that this was going to be the next $1 trillion stock was Broadcom. We talked about it, right? And guess where it is now? 1.7 trillion, right? It's more than triple since. So this is one area where I believe investors should not be missing. Like, this is an area where if you don't know which stock within semiconductors, SMH is my most simple and easy answer. If you were like, okay, which semiconductor companies, which chip stocks to really be buying, SMH covers all of it. It covers all of it. So that's why I have SMH, and then I have Nvidia as well for that additional extra alpha. But that's where I feel the next 10 years is going to be. It's going to be on semis. It already has done really well. I mean, You look at semiconductors from, where they were back in, let's say 2023, 2022. Since then, it's increased by 370%. If I do SMH divided by SPX and we go over the weekly chart, look at that outperformance. This outperformance is incredible. Since 08, the outperformance is over 700% for SMH against the S&P 500. So it gives you two things. It gives you a diversified ETF. Obviously, it's a thematic ETF focused on one sector, but it's a very, very pro-growth, and diversification is also there. So for me, semiconductors is the next 10 years. Better than SOXX? Then it comes down to just the nuances, right? So if you go to etfdb.com, you can compare both of them. You can compare SOXX and SMH and then see for yourself which one you like better. I think they're almost the same in terms of expense ratio. They're almost the same in terms of the overall holdings. So for this one, top 15, you got AMD at the top, Broadcom, Micron, Nvidia, Lam Research, Qualcomm, Applied Materials, all the different ones. And then if you go over to SMH, I think SMH has slightly different weights for what their companies are. So Nvidia's at the top, TSMC. So I like SMH better because the top three there, Nvidia, TSMC, and Broadcom, are, in my opinion, the strongest ones. And then, of course, you've got other ones like Micron, Applied Materials, Lam Research, ASML. ASML is a fantastic business. We've talked about it many times on the channel. And yeah, we're back at all-time highs here, $1,000. So these are companies that are just like super high quality, buy and hold type businesses. So yeah, long answer short, I do believe there's more upside. We're seeing technology move at lightning speed, and there's going to be a requirement for chips and AI in almost everything. So I'm 61. Should I dollar cost average for 10 years in SMH? So Johnny, again, your time horizon may not be 10 years. It could be 5 years. It could be 7 years, right? So what you have to decide, obviously, is are you going to be focused more on growth or income? I do talk to a lot of older individuals, members, investors that are in their 60s, that are approaching retirement, and what they really want is to secure income. Because that's really where the goal ends up being, right? So if you're approaching retirement or you are retiring soon, you want to replace your income with your investment, right? So you want to replace your active job income with the income that you generate from your investments. If you are, growing your portfolio, then the main focus becomes growth, not income. You could do both. So weird. You could do both. You could focus on both growth and income, but it'll be a compromise, right? So then, for example, Coca-Cola, like we went earlier, 12% growth for the year, another 3% dividend yield on the year. Pretty strong, right? So that's a blend of both growth and income. But a company like Nvidia, no dividends, but it's going to be pure growth. And then you've got REITs that are income focused, not a lot of growth. So it really depends on where you are in your... So if you're trying to grow a portfolio for retirement, then yeah, SMH is one to consider. But also be mindful that it is going to be a more volatile ETF as opposed to anything else that's more diversified. So not just, looking at growth and returns, but also understanding that it's going to carry some volatility. So, the older you get, the more careful you need to be, because the last thing you want is the year of your retirement and for the markets to take a dump. Imagine people retiring in 2022, right? 2022 was a brutal year. If you come over to SMH, we had SMH drop in 2022 from December 2021. So like literally from the beginning of 2022 to October, it was down 48%, right? 48% that entire 10-month period. So if you were having this conversation in 2021 and you told me that, I'm going to retire soon, but I want to grow my portfolio, is SMH worth considering? I would still give you the same answer. Just be careful, because if you are focused on growth but you're approaching retirement, you don't want something like this where if your next year's retirement and the market tanks and SMH drops 48%, that's a problem. So yeah, it's always making sure that you can tolerate that level of volatility, and you're only investing what you can afford in terms of that volatility. So Jeff says, I'm already retired. Do all growth up until you're retired, then income ETFs once you retire to provide your income remainder in growth. 100%. Yeah, I agree. So I think it's very important to grow your portfolio. That's really why it's so important for me, and what I've mentioned before is that my main focus right now is growth, right? I want to grow my portfolio, and then eventually it's going to be more so focused on income. Concentration builds wealth, diversification was keeps it. Diversification also generates more income streams coming in. So if your main goal right now is growth, then you're looking at more concentration, higher conviction bets. If your goal is income, then you're looking at more diversification and other assets as well, right? Stocks, real estate, bonds, 3 places where you can generate good income. So, all right, everyone. So market's about to open in just a few minutes. We got QQQs pushing up over 68 basis points right now. Then you've got the S&P 500 up over 0.5% right now. We got Meta Platforms pushing up over 0.5% as well. The plans for today are very simple. Going to be selling a covered call on Meta. We'll be looking at covered calls on Tesla for next year, so December 2026, but I'll be doing that next week towards the end of this year. And then, of course, we got a lot of other stocks such as Iron, BITX that I will be selling covered calls on this week, depending on how much they rally. If Santa Claus rally is in with us this week, we'll be looking at selling covered calls on them as well. Volatility is coming down, 14.8. Remember, anything under 14 and the alarm bells should be going off for everyone, because it's going to be in the 25th percentile, which is a pretty low number in itself. And that's exactly what we're going to be watching. The VIX, the MoneyVest Index, as well as the market as a whole. What do you guys think? Are we getting a Santa rally? Is a Santa rally coming in? So Broco, I'm very close to retiring. What are some good income ETFs that you recommend? So I think it's really important to look at dividend stocks and REITs, and then ETFs that are primarily focused on dividends, right? So if you look at Vanguard Dividend, so it's SCHD and VYM. They're both the US dividend ETFs that provide you a nice blend of both equity growth as well as dividend yield. So this one's dividend yield of 3.8%, which is pretty strong. And then VYM is, I think, a little bit less, might be 3.5 or something, 2.4. So it's a lot less. So SCHD is one to consider, which gives you a nice blend of both growth and income. Then there's a lot of ETFs. Then there's fixed income, right? So bonds are always an option. And then I also think real estate could be an option as well to diversify into that generates good rental income as well. There's more variables to control in real estate as opposed to in stocks. So, okay, yes, it's coming. I think Santa rally comes into town starting 24th as per historical Santa rallies. So we'll see if we've been good this year and if Santa indeed shows up for us for some profits and greens. So thank you so much, everybody, for joining in. Really appreciate you all. Again, link's going to be down below if you're interested in joining. Market's about to open here. We're ready to sell some calls on Meta and then Tesla next week. Again, 40% annual discount available until the end of this month. So there is just now 9 days left if you want to take advantage of that. And for everybody who does sign up, before the end of this year, you do get a complimentary Zoom call with me. Email me at admin@moneyvest.com, and I'm more than happy to schedule that call with you. And the goal would be to just get you started with options trading and have that first trade pay for the entire year's worth of subscription. That's the goal, is to help you, right when you join, so that you're getting the value that you need, and it's all getting paid from the profits you're generating while joining. So thank you so much. Happy investing. Any questions, email me. And as always, I'll see you all in the next video. Take care.